Hey traders, in this update, we're going to have one buy the dip and one sell the rip. And not only will this be a trade, or actually two trades, that you can execute via futures contracts, they also have ETF alternatives, which is such a big part of the conversation that we've been having in these videos the last couple of weeks, because taking some of these positions overnight is very different than exposure, say, via the option on the ETF, for example, in the case of the 6E. Now, this is a pretty affordable symbol, but this DX symbol is sometimes a little trickier because you actually need access to the ICE exchange, which does not typically come with a futures brokerage account where they'll give you access complimentary or party or trading activity to the CME and CBOT. The ICE is different. And dollar index is a great symbol to trade if you've got access to that. But the UUP is actually a pretty liquid ETF where you could trade the options on the ETF, which is very cool. So this trade is actually very similar because as long as dollar index goes up, FXE or the 6E will continue to go down. So there's one buy the dip by way of the dollar, and here's one sell the rip by way of the 6E euro futures. Now you might ask yourself, well, why would I go with the dollar, say the UUP? Well, one reason you might be interested in the dollar could actually be explained by taking a look at the currency contrast. Let's take a look at that. Now, this is a 1 month relative performance look back, and then we could even go back a quarter, 3 month. And what we're looking to see is what currencies have been consistently weaker than the US dollar. So one place we may not want to look if we're looking to buy US dollars, one place we don't want to look is the Canadian dollar. I would say we probably don't want to look at the Swiss franc and maybe even the pound. What you're looking for is where is the most contrast between US dollar strength and some other currency in terms of weakness. Well, that pretty much gives you yen, Australian dollar, and euro, 1, 2, 3, right? Now, the cool thing is every one of these has a liquid futures contract, and every one of these can be also traded. We talked about the FXE already. You can take a look at the FXA for the Aussie and the FXY for the yen. So you also have the ETF alternatives. This would be basically buy US dollars, right? And then you're going to short the euro, Aussie, or the yen, which is essentially going to be a position, right? So let's take it back to the chart here. This is essentially going to be a position where on the FXE, if they're puts, it's a put option, or a short if you're playing with the underlying. It's going to be a put option on the FXA. I like this setup actually quite a bit because it's trading right up against an area that we've seen resistance from before, and this 200 propulsion, as you can see here, which is in play again, has been in play before. So really like that potential position. And if you're looking at FXA, you're going to find it's not a super liquid ETF, but the 73 puts, which would be a little bit out of the money, that I don't love that, but the 73 puts for December 17 are actually really liquid, and that's really all you have to work with. So FXA is going to be a little thin. FXE is going to be really liquid enough to pretty much play whatever you'd like on a rip higher. But then that kind of says, well, if we have that many currencies that we could short against the US dollar, why not look at the UUP? Now, because the dollar is the second strongest, it's actually pretty justified to look for dips to buy in the UUP, because when you think about the basket that is this UUP dollar basket, you really want to see the dollar up against most of those currencies. So that would take us right back out to say December. And now we're looking at calls. And I would like to see a little bit more weakness, but I'm totally fine with the 25 strike for December 17. And you know what? I'm actually, if you want to take it out a little further and go out to January, you got to the January expiry, so we're talking next year, I would look at the 25 calls there as well. These are really inexpensive. I mean, really inexpensive. And so this is one way to take advantage of movement higher in the dollar while we're getting movement lower in other currencies. So buy the dip, sell the rip. We've got a lot of interesting setups in currencies, which just, again, reminds us there are so many currencies, commodities, indices that we can trade via ETFs. And these are just a few of them we're going to be getting into in live trading. A few other places that I'm looking just to put on your watch list. We've got plays on the VXX. We've got plays on natural gas. We've got silver also on the radar in terms of futures contracts that have ETF alternatives. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.